Praise the Lord, praise the Lord, praise the Lord. How's everyone doing this afternoon? My name is Elder Greg Twilley. I am a member of Faith, Hope, and Charity Ministries. And today we're going to discuss health and life insurance during the COVID, okay? I'm gonna give some information on actually what's going on, what to expect, and where everybody should be. So I'm going to share my screen at this time, and let me know if you see the screen. Does everyone see the screen? It says ICEA Region 2. Amen, amen. And I do apologize that you're not seeing me for some strange reason. I don't know why my video is not coming on, but nevertheless, I'm not the focus. This PowerPoint is going to be the focus. Is that all right? All right. So one of the things that the Lord has blessed me to be not just elder in the church, but to actually do insurance, financial planning, and to put this disclaimer out, this is not about me recruiting anyone to come get insurance or anything, but this is to give some basic knowledge on things that individuals should know. I think a lot of times our community has been, if I could use the word, hoodwinked into not understanding the benefits of not just health insurance, but also life insurance. So one of my questions always is, are you leaving a legacy to your family? Okay. And I know for some people, some of our seniors or whatnot, they were raised on understanding the power of having life insurance. For some strange reason, this new generation think they're Teflon and that they're going to be here forever. I've even had people say, well, I'm not worrying about that. I'm going to get caught up in the rapture, and that's all fine and dandy. And I pray that if that's your desire, that happens. But in the meantime, what are you going to be doing for your family? So leaving a legacy within the kingdom is what we're going to be discussing, and that's based on health and life, okay? So building a family legacy, leaving your legacy intact. And we got that from the NIV, Proverbs 13:22, that a good person leaves an inheritance for their children's children, not just their children, but the children's children. Life and death, one is part of the other. Something, one of my sayings is, death is something that we can't predict, nor can we postpone. So the question is, are you prepared? So in every decision, be it personal, governmental, or corporate, we must consider how it will affect our descendants 7 generations into the future. And this just is a principle taught by the Native Americans. And at any point, if someone has a question, you can either raise your hand or you actually can unmute yourself. This presentation can go both ways, so I'm just not going to be just speaking. I do expect participation, so feel free to comment, okay? So the question is, what can you do better prepared for life? What's your plan for life? So let's get started with the basics. So of course we have multiple types of insurance, and what always amazes me is being in the industry that a lot of times, especially on the life side of it, people will say I can't afford it or that's too high, but yet they have car insurance, and some of them have high car insurance because of their driving record. Of course, we know they have insurance on their homes, insurance on their cell phones, insurance, but yet the main thing that you should have insurance with your health and life, we sometimes neglect. So we're going to start off first talking about health insurance, which we're getting ready to get into open enrollment. Of course, the month of September is life insurance month. So what I always tell people is in the month of September, if you don't do anything else but to pull your policy out, blow the dust off of it, get the cobwebs off that policy, and look at that policy and make sure that it is still intact. And by that, and what do I mean by that? Make sure that your beneficiaries are still your beneficiaries. Make sure, based off of today's prices and everything, that you are well covered. A $10,000 policy 10 years ago could do a lot more than what a $10,000 policy would do now. So the month of September, rule of thumb, always pull that policy out, know where that policy is, and make sure that your beneficiaries and everybody that needs to know where it is. But getting into our health insurance, October the 1st is beginning of Medicare season. Of course, we can't do anything as an agent until October the 15th, but you have your Medicares from October the 15th to December the 7th. And then you have your AEP, or your basic under 65 insurance, from hold on one second. Your basic insurance begins November the 1st to December the 15th. Now, let me just throw this disclaimer out. This is an important year as far as where we're going to go from here. With the upcoming election, regardless of who you vote for, including Biden, it's important that you understand how powerful your vote is going to be this year, because you've got one that's trying to take as many rights away from you as far as your health care as possible, and you have another one that is going to try to improve what's already in place. Okay, so the one thing we want to do is make sure that we do early voting, or we get, and that's just a sidebar, early voting or voting the day of. So you're under 65, that would affect more than your seniors, because your seniors are pretty much locked in. And of course, they put a famous name on it called Obamacare, but that's really not the name of it, okay? So the health insurance, the affordable health care, of course, it started in 2010, and it was put into place, but it did not really kick off until around 2013. All right. Now, some of the pros of the affordable health care or Obamacare: more Americans have health insurance than ever before. Now, we're talking about individuals that were not getting insurance off their jobs, but just your average American. Health insurance is more affordable for many people. I would say this: For the blue states, it was. For the red states that didn't buy into the system, a lot of those did not benefit from the affordable health care. But here was a major one. People with pre-existing health conditions can no longer be denied coverage. That is powerful because, believe it or not, for the women out there, they consider having a baby a pre-existing condition. Wow. Could you imagine being turned down for insurance because you had a baby? But that's considered a pre-existing condition. And so the assistance of that was that it was eliminated with the affordable health care. And then it was no time limits exist on care. In the past, the insurance company could put a cap on how much they were going to actually pay for a certain condition. And so you had people that in the first part of their ailment were able to get coverage, but by the time they really needed it, they had already met their cap. And so at that point, that was eliminated. And then more screenings were covered. We're talking about the different medical screenings that was then included at no additional cost, that was locked into it, okay? And then, of course, the prescription drug prices went down. And for anyone that's on any type of medication, you pretty much already know how important that is. But then some of the cons of it. And of course, this was mostly what the red states, the Republicans, those that were opposed to the affordable health care, this was their arguments, that many people have to pay higher premiums. And a lot of times when we're talking about that, I always try to explain to people really how to properly go about your insurance. If you are not a sickly person, then having a high deductible is the way to go because it will lower your premiums. And of course, if you do have ailments or something like that, then of course you want to have a lower deductible because you're going to be using it more. It stated that you could be fined if you don't have insurance, but of course that was erased when 45 came in. That was one of the things that he dissected in trying to take away your benefits of health, but that was one of the things that he went after. So you no longer are going to be fined if you don't have insurance. Taxes are going up as a result of the ICEA. These are the arguments that they were using. It's best to be prepared for enrollment day. And then businesses are cutting employee hours to avoid covering employees. So a lot of jobs did cut people's hours so they no longer were required to actually provide the insurance for them. Now, on the Medicare side, okay, 65 and older, or for those that have a disability, we have Medicare, and that is a federal health insurance program for people who are 65 years or older, certain younger people with disabilities, and people with end-stage renal, which is permanent kidney failure requiring dialysis or transplant, sometimes that's called ESRD. Okay, so they qualify for Medicare. Now, we have different parts of Medicare, and this is where a lot of people get lost in understanding. So people under 65, your job, a lot of you all that's been on jobs in the HR department have been taking care of you, and you didn't have to worry about this. Once you reach 65, this is something that you really need to know. And so that's why I definitely wanted to make sure that I included it in this presentation, because so many seniors actually doing that, and it amazes me that they only give them from October the 15th to December the 7th to make a decision on their health care for the whole year. But a lot of people just don't know. So I try to get that information out as much as I can. So you have two parts actually of your Medicare. You have your Part A and your Part B. The Part A covers inpatient hospital stays, care in a skilled nursing facility, your hospice care, and some health care. Generally, your Part A is free, and I think in a later slide we'll go more into detail of that. But your Part B is your doctor. Covers certain doctor services, outpatient care, your medical supplies, and preventive services. Now, those are the two parts of Medicare that the government covers. Now, this is a part that the individual has to have, which is your Medicare Part D, which is your prescription drug coverage. And that helps covers the cost of prescription drugs, including many recommended shots or vaccinations or vaccines. And so you have to have those three parts in order to be fully covered. Now, I know it's another part to it, and we'll go over it, but these are some of the carriers of health insurance: Aetna, Humana, United Healthcare, Kaiser, Cigna, and Anthem, which is Blue Cross Blue Shield. These are major carriers pretty much across the country. All right, so also choosing the best insurance plan. And as I mentioned, if anyone has any questions, please stop me. Don't wait to the end because you might forget it. By all means, you can raise your hand, you can unmute yourself, or you can put it in the chat. When you're talking about insurance, whether it's health or life, these are some of the things that you need to take in consideration. Your financial independence, because those that don't have any type of insurance, you're basically at the mercy of the hospital, or the mercy of, without any life insurance, the mercy of, God forbid, the funeral home. For education, as I mentioned, your health, your disability, as well as I mentioned, transition into death, okay? And of course, age. It's known that we're actually living longer now than we've ever, that it's ever been noted. And part of that is because of, I believe would say the affordable health care afforded a lot of people that did not have insurance, that got insurance, to all then become more conscious of their health, and so therefore people are living longer. Okay, so how do you plan for life? Of course, through life insurance. And so then you have different types of life insurance. Okay, you have your term life, you have your whole life, universal life, as well as variable universal life. Now, one of the things how you choose it will be based really on your situation. What works for one person might not work for another person, and that's really the benefit of the different categories. But as I always mention to people, having something in place is better than nothing. So here's a quick breakdown of, just based on a suggestion of how one should look at insurance. Now, I would say this, even though we're starting at the age of 18, believe it or not, the younger a person is, as far as getting life insurance, the more that the policy can do for them. Believe it or not, it's called a life insurance, not a death insurance, but a life insurance. So these policies now have the ability to build cash value. So by the time they are young married or young family or even in college, that money could be used to buy the policy. So generally what we say is between the ages of 18 to 42, You can get a term policy or a return premium policy. Now, keep in mind, a term policy is renting insurance. What I tell people all the time is when you get a term policy, your goal really should be to outlive the term policy because the insurance agency is betting that you outlive it so that they don't have to pay it. And basically, when you get the term policy, you're really saying, oh, I might check out of here before that time. But I will say this, term policies have a lot of benefits. One being that you can get such a large amount for a much smaller price. And on top of that, depending on the carrier that you're dealing with, that policy can be converted to other things, an IUL, which we'll get into, or a whole life policy. And here's the real kicker to that, is that once you get a policy and have it in place, you become guaranteed issue with the value of that policy. Quick analogy on that, if you get a $500,000 policy, once it's approved, that means regardless of how you convert it, there is no additional underwriting needed up to the 500,000. So a lot of times I tell people just put something in place because this will guarantee you for the things that we're going to do later on with your policy. Okay. And then as you become, get into the age of getting ready to get married, creating a family, already having a family, preparing your kids for college, as I mentioned, that term, that return of premium term, and what the return of premium term does for you is when it expires, provided that you paid your premiums on time, you would get all that money back that you paid into the policy. So that's a good policy for young people, young disciplined people, because the other caveat of that is if you miss a payment or that payment lapsed, that voids the policy as far as the return of premium side. Even though they might reinstate the policy, you would then lose the benefit of getting your funds back. And so you have to definitely make sure that you're diligent on that. Or the UL, or your universal life, or IUL. Just to give you a quick idea of what an IUL index universal life policy allows you to put extra money in the policy and use it for later in life. That is where a lot of your well-off people with money, put their money in, believe it or not, in IULs because of the guaranteed interest that you make off of it, as well as the security that it gives you. It is better, believe it or not, than the stock market. I know a lot of people don't like to hear that. A lot of people like to dabble in the stocks, but trust me when I say this, IUL or annuity will do more for you and give you more guarantees and protection than the stock market. But I'll leave that alone because that's not what I'm talking to you about. And then if you notice, I'm still talking about term because term basically will expire by the age of 80 in most cases. So after a while, you have to start looking at long-term versus rental, okay? So now on the other side of 50, depending on what type of policies you have in place, the final expense lifestyle comes into play now. And that's one of the policies that I recommend, regardless of what type of policies you have. I do push and advise people to get final expense policies. As I mentioned earlier in my disclaimer, this is not so much to sell anyone any type of policy. This is to give you some basic knowledge that when you're sitting across from your insurance agent, or when you're sitting across from your financial planner, now you will have questions that you can ask them and not be on the receiving end of them just telling you how to spend your money, okay? And then got your universal life, your long-term care that most of our community has no idea of the benefits of having a long-term care policy in place, but it is a policy that you have to get while you're in good health. You cannot get it once your health starts deteriorating because you will not qualify. But around the age of 50 and between that 50, 55 and no older than 60 is a good time to get a long-term care policy, because as you get older and you're living longer, the benefits, the riders that those policies have, and with a good one, they have three stages. They have an in-house part, they have a daycare part, and then they have the nursing home part. And all of those can make life real easy. Our community for years have always depended on family to cover those things. But at the same time, if your finances are in a position where you can get a policy, it would be well worth it later on in life. And then, as I mentioned, the final expense, I'm a heavy advocate of that. I think everybody should have one, because it is the one policy, regardless of what other policies you have, that generally pays out within a 24 to 72 hour time frame. A lot of the carriers that provide final expense don't even require a death certificate at the time to process the claim. And that way, when you're going into the funeral home, you don't have to worry about being taken advantage of by taking a large policy to the funeral home and yet them taking as much money out of it as they want. And then this one right here, for those that are striving to get to this point, the 60 plus, the retired ages, tax-free cash, and policies out there that if you would have started when you was 18 or 22 or 31 or even 46, by the time you get to this retirement age, you now can be living off the benefits of having a policy where you could literally draft money or draw money off of it for the rest of your life, and it is tax-free money. And the way that it's paid back, of course, is when the good Lord calls you home, okay? Now, the 3 C's of National Life. National Life is one of the companies that I tell people about because of the benefits that they have. And so once again, as you're talking to your insurance agent or your tax advisor, or even you're shopping around, this is a good company to look at. Now, National Life is the parent company. LSW is the secondary, I would say. National Life is only in New York City. Everywhere else, LSW is used. But they have competitive prices. Their term benefits is just great. And then they have a lot of living benefits, which I tell people all the time, if your policy does not provide living benefits right now, then it's time to look at possibly not getting rid of it, but getting an additional policy, because as I stated, people are living longer now. And so a lot of these living benefits include what we call critical injury, chronic riders, terminal riders in it. You know, you don't have to die or leave this earth in order for the policy to pay out. And then the fact of the term policy, the conversion that I was talking about, you'll be able to convert that policy over into a whole life or IUL with no underwriting or anything like that, which is powerful. All right. Now, qualifying events, as I mentioned. Uh-oh, we're having some problems here. see if we can. Look like it's trying to move on its own. Let's see if I can.
The services under status to close.
We're gonna get it. Okay, so terminal illness. Generally, if it jumped. Well, I would say this: if you've been diagnosed with a terminal illness that will result in a 24 months time frame, you can draw money off of that policy. That's powerful because a lot of times what happens with our loved ones that don't have those type of policies, the family then becomes I would say the secondary care people. So you got individuals that end up taking off from job. You have family members that have to change their whole life around that individual, which is great because I believe in the family concept. But if you got a policy that's in place and it has these benefits, then not only can you pull the money off, but then no family member has to really take a financial loss while they're trying to run their home as well as assist with a family member. And then you got your chronic illness, okay? A doctor has certified within the past 12 months that you're unable to perform 2 out of the 6 activities of daily living for a period of at least 90 consecutive days without assistance, or that you're generally congenitally impaired. So when you look at the activities of daily living, that means that you can bathe yourself. Contingency, that means that you can get up and do your own duties. You can dress yourself. You can eat, feed yourself, your toiletry, and then you can transfer. Transferring is when you can get in and out of the bed. So if any 2 of those things are triggered, that's considered a chronic illness if it's for 90 days, and you would be able to pull money off your policy. Same way with your critical illness and injury. So, you know, what I try to advise people is look at the policy that you have, compare what you have right now. And the other thing that you do, you look at the longevity of your family members. How long did your father live? How long did your mother live? Are they still living? That kind of like gives you a, what we want to say, some type of data of possibly how long you possibly would live. Now, we know that God controls all, and death is something we can't predict or postpone. But generally, if a family has longevity in their family tree, then it's in the tree, you know. So you want to take in consideration of those type of things when you're looking at a policy. So why should you plan for life? Well, final expenses can be quite costly. This COVID 2019 or 2020 has really taken this country by storm. And I want to extend my condolences to any family out there that has suffered because of this coronavirus, because for one, it changed the whole way that even funerals are done now. And so most people are unprepared and no experience, emotions cloud reasonings. So of course, I always try to advise people that any assistance that you can get, you have funeral home, you got funeral carriers, companies that actually have people on their payroll that will assist and to walk a family through it. And unless you've ever been through it, regardless of how strong you are right now being on this line, that it's a different side of life once one has lost their life and you have to walk into the funeral home. And what I tell people all the time is the one thing about the funeral director or the people working at the funeral home, they know you're not coming in there window shopping. So when you come through those doors, they already have an upper hand because they know what you're coming in there for, okay? and then you get very little government assistance. You would be surprised how many times I talk to military people and they say, oh, that's taken care of. Well, no, it's not. Okay, I'm telling you, if you've been in the military, or you know someone in the military that thinks that way, or even some people that have retired from the government, they don't realize that their policy is losing value year after year. And the government gives $255 towards your death. And it also eliminates confusion. If you ever want to see a war break out within a family, let somebody pass away without a policy. Matter of fact, let them pass away with a policy and they didn't properly put things in order, okay?
But your ability still be on that though, and
Most of all, it relieves stress, which is important. So final expense insurance policies used to pay for birth and funeral service when the named insured dies, such as a policy helps ease the financial burden placed on a family when a loved one dies. So what will it cost? Well, I generally tell people the average funeral cost at today is between $7,000 to $10,000. That's not including burial, which is another $2,500 to $5,000. So if you don't have a policy somewhere in that neighborhood of $10,000 to $15,000, you're going to need some assistance from somewhere, okay? Because a lot of times when people think about funerals, excuse me, they only think about the funeral home. They don't realize that there is a lot of other things involved in that. And so I always advise people to, first of all, get something that definitely is affordable, because that's the important thing. You don't want to get a policy that 2 years from now, 3 years from now, you're going to allow to lapse, because that serves no purpose. But more important, you want to understand that the funeral business is not going out of business, and the prices are definitely going to rise as time rises, okay? My famous line, GoFund is not life insurance. And I tell people all the time that my personal opinion for anyone that this is my personal opinion, that is the most embarrassing thing that can ever be put on any of the social media sites, that you basically have to use a GoFund account because your family member or you weren't properly prepared. It's just an example of a family. We think that it's always about old people, but in this particular case, these 4 young babies passed away with no policy, and they depended on GoFund to raise the money. Now, don't get it wrong. We as a people, we are sympathetic and will give. But at the same time, that's really not the way it should be done. GoFund is not a life insurance. It's completely irresponsible to not plan for your own final expenses. When you fail to plan, you create extra burden at the time when your family is still trying to grieve over your passing. So it's just, my whole thing about it is do what's right. And these are just some of the companies that I came up with. There are many more out there, but these are some notable companies that do provide insurance. And now I'm gonna open the floor up for any questions, any comments. Feel free to ask. If you have any questions, whether it's about yourself or another situation. So the floor is open. Just unmute yourself and let's respect each other. No one?
Yeah, I have a question.
I'm listening.
Is it true that when you're on disability at a young age, and then when you reach 65, they kick you off and put you on regular Social Security?
When you're on disability, generally you will stay on disability. They might transfer it as far as in the finance, how they how they categorize it, because once you turn 65, you go under a different bucket with the government.
Okay, but how are you classed as though? You know what I'm saying? I'm trying to get. Are you still classed as a disability, or are you classed as just regular Social Security?
You,
No, you gonna that disability. If you have permanent disability, that's always gonna be there.
Okay.
okay. On the goats,
Any other questions? Either y'all making me think I did that well of a job, or or all of you all are in got everything covered. But nevertheless, like I say, this was just a general description of the health and life, of course, under 65, over 65. We're going into that time of the year where it's important that you read your information. I tell people all the time, read the summary of benefits. Don't allow a premium or a deductible. We'll put it this way, don't allow a deductible to run you away from a policy, because if you do on the health side, if you're not sickly, many a times I ask a person, I say, well, when's the last time you've been in the hospital? Well, I've never been admitted into the hospital. Okay, well, why are you worrying about this deductible? This deductible will only apply if you get admitted into the hospital. The one key that I always tell people is to make sure that your deductible is not attached to your doctor visits. And then when all else fails, here's my catch-all for everybody. If it's a life or death situation, the last thing you should be worrying about is what the bill is going to be. Okay? Anyone else? Anyone else? Well, with that being said, we do want to pour into the region. Here's the ways to give. You can give through GiveFly, or GiveFly, Cash App, as well as PayPal. Okay, so we want to make sure that we plant our seed into the region. Since no one has any other questions, I appreciate all of you all for taking some time out of your busy schedules. I hope and pray that I did give you enough information to at least investigate your own selves. Here's my information that if you need to call me, regardless of what state you're in, although I might not be licensed in that state, or, it's, like I say, once again, it's not about me trying to sell a policy to you or anything, but it was more about educating you on the rights that you have, because an educated consumer is the best consumer. So the more you know about the different things under 65, how to read your summary of benefits, making sure that your primary care is not attached to your deductible. For your over 65, I really didn't get into the Medicare Advantage, which is your Part C, but you got different versions. You got a Medicare Advantage, and then you have your supplements, of course, because that's a conversation that you can just go on and on with. But each person really has to look down within their own, look at their own budget and put what's needed in their life. But I do recommend that everybody has health insurance. I do recommend that everybody has some sort of life insurance, whether it's starting off with a term policy or a whole life. And then I definitely do say that a final expense policy personally to that anybody can have, because as I always say, death is something we can't predict, nor can we postpone. Since there's no additional questions or concerns.
Can you go back to that last slide with the information for the GiveFly?
Okay, there you go.
Okay.
All right.
Okay, New Jersey. All right.